down 46% in 2022. Is Micron Technologies stock a buy for 2023? I'm going to answer that question in this video, so let's get right into it. The first thing I'm going to look at is Micron's revenue growth over the years. And what you can see from the business going back all the way before 2014 is that it's a cyclical business, right? You have these big booms in revenue, and then you get these declines, and then you get another big boom, and then you get a decline. So it's a cyclical business. As it ramps up investments in the next generation of NAND or DRAM technology, business booms, and then it comes back, then it booms, then it comes back. Micron is used to this, and it's in another one of those contractionary cycles right now as inventory levels of these semiconductors are elevated, and so it needs to work its way through the system. These headwinds are likely to persist over the next few quarters at the very least. Micron's revenue in the most recent quarter fell by 46.86%, and management thinks these headwinds are going to persist at least in the first half of 2023. The next thing I want to look at is Micron's operating income, again on a quarterly basis, going back the same amount of time. And similar to the revenue ups and downs, it experiences operating income fluctuations. The good news is that there is a lot of profitability, over 3 billion in the boom in 2018, and then again 3 billion in this latest boom. And then when it does lose money, like in the most recent quarter, it was only down 196 million. So I like that when the company does well, it does well in the billions and billions of dollars, and when it has a severe uh, contractionary quarter like the most recent one, it only lost 196 million. I like that up that difference between the good year and the bad year, or the good quarter and a bad quarter. The next thing I want to look at is cash flow from operations. And the interesting thing here is, even though cash flow from operations contracted most recently, it was still positive 943 million, and it had quarters of well over $4.5 billion in cash flow from operations. So this is a company that's increasing its cash flow from operations over the years. The up cycles have gotten better, the down cycles have gotten better, and so it's you see really high cyclicality, which I do not like to see from my investments. I don't like to see companies that are so heavily situated with boom and bust cycles. Uh, that creates an increase in risk if they're so dependent on those boom cycles. But at the very least, Micron is, when it does have a boom, the booms are higher than the busts, and over time, the even the bust cycles are higher than the booms. Like you see here, when it crashed down, this low level here was much higher than the low level here around 2016 and the low level around 2014. So you see that steady upward trend even on the lows. If you measure just from the bottoms, you see higher lows in its cash flow from operations, which is good news. All right, and then I wanted to show you the fact that Micron has been buying back its shares. So it has reduced its average shares outstanding from over 1.2 billion before 2019 down to 1.09 billion. So there's over 10% fewer shares outstanding than was just 3 years ago. That means the existing profits are split among fewer shares, which means an increase in the earnings per share. So that's good news for investors that in uh, as time goes on, the company's buying back shares, and your profitability share is increasing. Finally, I wanted to look at valuation, and Micron is trading at a very cheap forward price to earnings ratio of 6.8. This is the lowest level it's been at going back since all the way before October of 21. Um, 6.8 is not only cheap relative to itself, but it's the average stock in the S&P 500 is trading at a forward PE between 16 and 19. So for this stock to be trading at 6.8 is cheap. Yes, it's got headwinds ahead of it, and it's got an extremely cyclical business selling non-differentiated products, right? The There is no difference between NAND storage from Micron and versus a NAND storage from a competitor. The same with DRAM. There's not much differentiation there. It's a commodity product almost. And so it's just a matter of who can do this most efficiently in terms of manufacturing and distribution. But Micron has shown that it's relatively skillful in that in its operating profits are nice, its cash flow from operations are increasing in terms of the lower lows, and so it's doing a relatively good job in running the business. It's in an industry that's going to grow over the next 5 and 10 years. Folks are consuming more and more data, more and more RAM is going to be needed, more and more storage is going to be needed, and so the entire industry is going to grow and it can lift all boats. And so to answer the question, is Micron stock a buy for 2023? I'm going to say yes. Yes, it is. The incredibly cheap valuation, along with proven billions of dollars in profitability and the prudent financial management by the company buying back its shares, reducing its share count, has me recommending the stock as a buy for 2023. All right, that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.